Welcome back to Switzer on Australia's Business Channel. With the budget looming, there's one of Australia's best fund managers, Geoff Wilson of Wilson Asset Management, sees some budget bargains or budget bombs that we should offload tomorrow or Monday. And if he hasn't got anything in the budget neighbourhood, well, let's just get some stocks from him anyway. Geoff Wilson, thanks for joining us on the show.
Good to see you.
Great to see you here in the studio as well, mate.
Yes, no, good to be here.
OK. Now, last year, was it Macmillan Shakespeare? Was that a budget bomb or was that a pre-election bomb?
It was a pre-election bomb, unfortunately, when the stock fell from, what, 13?
15?
Oh, yeah, actually down to...
8?
Was it, yeah, or it could have even gone lower.
I think both you and Roger started saying goodbye about round 8.
Yes, and it rallied back. And that actually, I mean, if you wanted to buy a stock for the budget, I would say that is one. It wouldn't surprise us. It's been drifting down. There's still concerns.
Is a government looking for saving money?
Yes.
But I don't think this government's going to touch that.
I don't think so. I mean, because they did say...
Well, they'd be kicked out of the North Shore if they tried that sort of stunt, wouldn't they, in the eastern suburbs?
Well, they did say, of course, various things before the election, which they might have changed their mind.
How good's a promise nowadays?
Right. And they did say they wouldn't touch that. And so it wouldn't surprise us if the stock rallied 5 or so percent.
And it went up today.
Did it? Okay.
Yeah, had a good day today.
And also, actually, today was interesting. Echo. I don't know if you noticed. Echo was up 5%. Now, why was that up 5%? Is Packer doing something? You know, is he trying to get the focus somewhere else?
Okay.
But I'm not sure. But one of the theories someone was telling me is that with King's Cross closing down early, there has been a lot of, I think, drinkers have been going to the...
migrating to different watering holes.
Exactly, to the casino, and whether that's been a slight positive and whether the numbers are a little bit better, I'm not sure. But
that makes a lot of sense.
Yeah. The other stock we think should benefit from what's happening in the budget is NIB. With what's happening potentially with healthcare, if... depending on what they do, if high-income earners are going to have to pay more people have to...
It could be forced to.
That's right. I mean, if Medicare was listed, then you'd say that would be another play, but...
Is it a takeover target if Medicare is listed?
I think it is vulnerable. There's no doubt it is vulnerable.
Are you holding NIB?
No, we don't. And we don't own Macmillan's.
You used to in the old days.
We have owned it from at various points in time. Right. On the other side, I mean, what are the negatives for the budget? Geez, a lot of things. I think, high-end retailing, obviously, because of the taxes that are going to go at that level.
Here's an interesting question, because you are kind of well off. Let's make an assumption.
Yes.
Some economists say, well, because it's only starting at 150, a lot of the low-income Australians, particularly people under 80,000, they are big spenders of their money.
Yes.
Where the wealthy people are big savers. Even though they spend well, they're also big savers.
Yes.
So the assumption is that if you get slugged by the government, you're still going to go to your fancy cafes after your bike riding.
Yes.
You're still going to go overseas. You're still going to go business class and all that sort of stuff. You won't change so much. You might resent it.
We don't go to fancy cafes after our bike riding.
Oh, no, you don't. OK.
In terms of it won't have the same impact.
Yeah.
And I agree with that logic.
Yeah, OK.
Yes.
But you're right.
And the problem is they're talking today about increasing the petrol excise again.
Now, that was a bit of a tricky one.
Yeah, and so that's going to have a negative impact on the general population.
OK. So is there a company that you think is vulnerable?
Well, I mean, to me, it's generally. I suppose the tough thing is, even though the actual impact mightn't be directly in the hip pocket of the earners, it's the uncertainty, the concern. To me, it's very concerning that the government has done this, has said they're not going to increase taxes, and now they've done it. The breaking of you can't trust them.
And part of the reason why you wanted the coalition government, you thought that the other mob weren't trustworthy for business.
100%.
Now these guys seem to be playing the same sort of game.
Yeah, so it just creates uncertainty, and uncertainty is bad for the equity market.
Last week, Charlie Aiken called it a Canberra correction, because when the debt levy came.
Definitely.
Well, is that a fair call that there was nervousness?
I think so. And the interesting thing is, when they come out with a hard budget, the Aussie dollar will probably rally because the overseas investors are saying, well, actually, they're doing responsible things. Now, and then who gets impacted there? It tends to be mainly negatively impacted because the companies that have big earnings offshore, the News Corps, the Brambles, QBE.
The companies we're waiting to actually come through and carry the market forward in the second half.
Yes. So if the Aussie dollar does strengthen, that's probably slightly negative.
Yeah, okay. So from your point of view then, is there if this budget is too tough, your belief is that $8 goes up. Is that going to lower your expectations of what the market can do this year?
Yeah, I think it's going to be a tough year for the market. Yeah, I mean we're holding over 40% cash, which is high. I mean,
for you, it's high.
Yeah, we normally hold a reasonable amount of cash just to have flexibility, but it is, and we're finding it hard to find value.
Yeah, is that because the market's gone too high, or just the stocks that have been doing well, they're too high, but the ones you'd probably like to buy if the Aussie dollar was 80 US cents, well, that because of what Janet Yellen's doing and what these guys are doing, it could be a long way off.
There's no doubt there's been a really, everyone's fallen in love with the same stocks. The P's of those have been extended, and we're finding it hard to find any value.
Is there a stock you have said, you little beauty, this one actually is good value?
Not at the moment.
Well, why don't you come on the show?
Because you asked me.
You've given me a couple of decent stocks.
Yes.
All right, what about Crown?
Yes.
With the activities in Bondi, you would have noted that. Have you ever been an investor in Crown?
Oh, we have. We're not at this point in time. Yeah.
Do you think they've got a good international strategy, or does
I think they've done an incredible job. Yeah. I was an incredible sceptic about Macau, and I'd seen their facilities a couple of times, and how Macau has developed is just phenomenal. Like, I was there a year and a half ago, and it was just booming. Yeah.
Because Charlie still thinks it's a pretty good buy.
Yes. I haven't got a strong view on it.
No. You've never kicked the tire and said, no, wouldn't buy it.
Exactly.
Just as you haven't got a strong view on it. What about, I put this view forward, because you're the kind of person who will often buy stocks before they actually go up. You think you make money by buying stocks when they're low in price and they've potential to go up, right? That's just
the theory. Yeah, and what we try to do is we try to find a catalyst that's going to change to make them go up.
So I've got the catalyst. Yeah. Sometime next year in the USA, interest rates will go up.
Yes.
Right? No matter what Yellen's saying now, this economy is looking a lot better than what people thought 12 months ago.
Yes.
So when the greenback goes up, Oz dollar will come down.
Yes.
We don't know where it's going to go to. People like Deutsche Bank have said 66 cents or whatever.
Yes.
Then is it wise for the long-term investor to say, those stocks that are out of favour now because the dollar's rising, buy them now?
Yes.
Is this a Wilson-type strategy?
To me, the logic's there. And also, in the first couple of years of an interest rate tightening cycle, the market does well. Even though the market doesn't look cheap, the fact is, if rates are going up, it's going up because growth is coming back.
The economy's looking better.
Exactly.
And earnings...
Yes, our earnings are going to be stronger.
Yeah,
so therefore, and your logic, there's nothing, your logic makes sense.
Okay.
And you're better off, in the long run, you're better off buying companies that are out of favour. Yeah. It's sort of like the NAB Bank result today.
Yeah.
NAB's been...
NAB because
everyone hates NABs, and so that's the one you've probably got to be buying, because at some point in time, they've cycled through, they've all been in and out of favour, the big banks.
Yeah.
And if you're going to play the banks, you're better off buying the one that's out of favour and then selling it when it's in favour.
So given the fact you're holding 40% cash, one day you're going to start putting that back in the market, aren't you?
Yes.
So people who can't find value, are they wise if they invest in your company? Because that's what you do? Well, you're going to say yes, of course.
No, I'm not going to say yes. No, okay. I mean, the problem with our company is because people are looking for yield, our companies are trading above what the value of their assets are worth.
Oh, okay.
So we like buying things that are below.
Yeah. So you're not even buying yourself at the moment?
No.
Yeah. Can you do that? I guess you could.
Can you not buy yourself? Or can you
buy your own stock?
Oh, yes, like anyone can buy. Just trades on the stock market.
Of course you do,
yeah.
All right. So, but the idea of saying, okay, take a position.
Yes.
I might look like a bit of a dope for 1 year.
Yes.
But when those interest rates start rising and the Aussie dollar comes off the boil, I will be in the money.
Oh, yes. And the Aussie dollar, it is too high. We know that. The question is just when.
Okay.
And you're 100% right. When they start increasing rates overseas.
All right. So I know you're the sort of person who actually investigates the company before you buy them.
Yes.
But just from a distance, what companies that you think are really dollar sensitive
Yes.
might you be looking at when you start getting serious about?
Well, it really is the big ones. Yeah, I mean, as the ones I was talking about before, it's the News Corps, it's the Brambles, it's the QBE. I know QBE's had a tough period.
Yeah.
But it's really the companies that have big overseas earnings, and they're the big Aussie dollar. You know, they're the big Aussie dollar
They'll have a
players.
significant
and you go with
benefits to the bottom line.
Yeah, I mean,
What about ResMed? Have you ever thought about?
Oh, definitely. Well, I mean, and it's interesting. ResMed is actually, we were talking about that last week.
Yeah.
And that was
your investment committee.
Exactly. The fact is, the multiple, it has come down significantly.
Yeah.
It's probably the cheapest it's been.
Got a lot of cash in its balance sheet.
Exactly.
And very little debt.
That's right. And they've had I think their last product, it hasn't really worked.
Yeah.
So, the odds are the next product will. And so, I mean, we're actually looking at that very closely. That's not for an Aussie. That's not for an Aussie US dollar play.
No.
That's just to buy.
But it will benefit from a lot of dollar as well.
100%.
Okay, so we'll call the Wilson blockbuster for the night ResMed, but not with strong conviction. But
fair to have that.
All right, great to see you, buddy. Thanks for coming on the program.
Thanks.
Always good to see you. After the break, one of Australia's comparative advantages in the region is our top quality and safe produce. We'll hear from an Aussie success story, which is blazing the trail as we fight to become a food bowl of Asia.